Markets are still worried about the ripple effects of Russia's attack on Ukraine. That's our top story today on the Wall Report. I'm your host, Greta Wall. Wall Street kicked off a new month of trade lower today as the war in Ukraine sends shocks through the global financial system. Shares of all the big U.S. banks are down sharply today, with the XLF ETF falling nearly 3%. Now, this comes as Treasury yields continue to drop as investors flee to safety. The yield on the 10-year Treasury note is hovering around 1.73% today. Remember, just a few weeks ago, it popped above 2% for the first time since 2019. And currency troubles are still plaguing Russia after severe sanctions were imposed on the country. The exchange rate on the ruble is currently at more than 112 ruble to $1 US. Now, that drop prompted a bank run in Moscow Monday, with Russians scrambling to pull out cash. In response, the Russian central bank imposed capital controls today, limiting how much cash can leave the country. And as Russia's financial woes get worse, oil prices are surging to 7-year highs, or amid 8-year highs actually, amid fears of an impending supply shortage. Now, West Texas Intermediate crude futures are up more than 9% to over $104 per barrel. Meantime, Brent crude futures are up more than 8% at over $106 per barrel. That's the highest price for both since July of 2014. The International Energy Agency agreed today to release 60 million barrels of oil from global reserves. But the U.S. alone consumes more than 20 million barrels per day. So how much will that really help? Canada became the first country in the world on Monday to ban Russian oil imports. The U.S. has so far said it will not stop importing Brent crude. But oil prices are not the only commodity skyrocketing amid this conflict. Wheat prices hit limit up today, surging to the highest level in more than a decade. Futures jumped 5.35% and trading was halted at 984 cents per bushel. Now, that's the highest price since April 4th of 2008. Now, 17% of the world's wheat comes from Russia, with 12% coming from Ukraine. And corn prices are also up sharply, surging more than 5% to $7.25 and 75 cents per bushel. That's the highest price since May, and also marked a limit up, with trading halted at that price. And as Wall Street's focus is on Russia and Ukraine, earnings are still trickling in. Target shares are on track for the biggest one-day gain since August of 2020, surging more than 12%. This comes after the retailer beat fiscal Q4 profit expectations. Target reported adjusted earnings of $3.19 per share on $31 billion in revenue. Sales to the company's online services, which includes curbside and in-store pickup, rose 45% last fiscal year. Now, Target's outlook was also strong, with the retailer forecasting continued annual revenue growth in the mid-single digits and profits in the high single digits. But it's not the same story for Zoom. Shares of the video conferencing giant are down nearly 5% after warning that growth will continue to slow. Zoom reported Q4 earnings of $1.19 per share on $1.07 billion in revenue. Now, that beat analyst expectations on both the top and bottom line, but marked a continued slowdown in growth. Revenue rose 21% year over year, compared to 35% in Q3. And Zoom forecasts that Q1 growth will be at just 12%, marking another slowdown. Now to the economic data of the day, with manufacturing activity picking up faster than expected. The Institute for Supply Management's manufacturing PMI rose a full point to 58.6% in February. That was higher than economist expectations for just 58%, and any reading above 50 does signal expansion. Now, this jump comes as Omicron cases dropped across the country, but now the war in Ukraine could create higher costs for manufacturers. Most respondents to the survey reported difficulty in hiring workers and supply chain problems. And while the market is still focused on that war in Europe, traders are looking ahead to the beginning of jobs data tomorrow. Payroll firm ADP releases its private payroll report for February tomorrow morning, with the official Labor Department jobs report on Friday. The ADP report is expected to show a gain of 400,000 jobs in the private sector last month. Attention will also be on the Fed, with Chairman Jerome Powell testifying in the House and the release of the bank's beige book tomorrow afternoon. So be sure you're subscribed to my Coffee with Greta newsletter to get the details of the private jobs report tomorrow morning before the market open. There's a link in the description to sign up. I'll see you all back here for the Wall report tomorrow. Hit that subscribe button and the notifications bell before you go.